Why baseball cards lost their value. There was a time when a small piece of cardboard could feel like a treasure. Kids would trade them, protect them in plastic sleeves, and imagine they might one day be worth a fortune. Entire collections were built around the idea that these cards were rare, meaningful, and valuable. And then something changed. Today, most baseball cards from that era are worth far less than people expected, sometimes almost nothing at all. So, what happened? How did something once treated like an investment turn into something so common it lost its value? When baseball cards were actually rare. Before baseball cards became mass-produced collectibles, they lived in a very different world, one defined by uncertainty, limited production, and genuine scarcity. In that earlier era, a baseball card wasn't something you bought with the expectation of building a set or tracking down every variation. It was something you happened to get, often by chance, tucked inside a pack of gum, a cigarette box, or a small food product, and that randomness is what made them feel rare. In the early 20th century, baseball cards were closely tied to everyday consumer goods rather than dedicated hobby products. Companies used them as promotional inserts to encourage purchases, not as standalone collectibles. Because of that, production wasn't always consistent or even fully documented. Some cards were printed in smaller quantities, simply because demand for the product. They were attached to varied region by region. Others disappeared into circulation, with no clear record of how many existed in the first place. This era aligned with the rise of professional baseball, a defining American sport. As Major League Baseball grew in cultural importance, so did the appeal of its players. Fans didn't just follow box scores, they wanted physical pieces of the game. A small card featuring a player wasn't just memorabilia, it was a tangible connection to a real athlete who might have seemed larger than life. But what made early baseball cards feel truly valuable wasn't just the players on them, it was the difficulty of obtaining them. There was no guarantee that buying a product would give you a specific card. Entire sets were hard to complete, and many children or collectors never came close. The idea of rarity wasn't manufactured through marketing. It emerged naturally from limited supply and uneven distribution. Companies like Topps later helped formalize the baseball card industry, especially after the 1950s. But even then, production remained relatively modest compared to what would come later. Early Topps sets still carried a sense of unpredictability. Packs were cheap, but what you pulled was always a surprise. Another major producer of the time, Bauman, contributed to this landscape as well, with its own competing sets and limited print runs. Because of this limited availability, certain cards began to take on outsized importance. A star player card wasn't just desirable because of who was pictured. It was valuable because not everyone could easily find one. Even common cards had a sense of weight to them, simply because they were part of something incomplete. Collectors weren't thinking in terms of market value or resale price. They were thinking in terms of completion, discovery, and luck. There was also a physical quality to rarity in this era that is easy to overlook today. Cards were more fragile, more inconsistently produced, and more likely to be lost, damaged, or thrown away. Many were treated as disposable objects by the companies that made them. Ironically, that disposability is part of why surviving examples from early sets are now so prized. In this environment, value wasn't artificially created, it emerged naturally. A card felt special because it was uncommon in practice, not because it was labeled as limited. That distinction matters. True rarity comes from constraints in production and survival, not from marketing language. Looking back, the early age of baseball cards shows how fragile collectible value really is. It depends less on the object itself and more on the conditions surrounding it. How many were made, how many survived, and how difficult they were to obtain in the first place. Before speculation, before mass production, and before the idea of investment entered the hobby, baseball cards were simply small, uncertain pieces of a growing national pastime, rare not by design, but by circumstance. The rise of collecting culture. There was a time when baseball cards were just small surprises, tucked into everyday products. But over time, they became something much bigger than that, a shared cultural habit, a childhood ritual, and eventually a national collecting culture built around memory, identity, and fandom. The rise of baseball card collecting closely followed the rise of baseball itself as a central part of American life. As Major League Baseball became more deeply woven into everyday entertainment, fans didn't just watch games, they wanted to keep pieces of them. A card was more than cardboard. It was a snapshot of a player's existence at a specific moment in time, something you could hold, trade, and organize. In an era before constant video highlights and social media clips, these physical objects helped preserve the presence of athletes beyond the field. By the mid-20th century, companies like Topps helped transform baseball cards into a more structured hobby. Sets became more organized, statistics were printed more clearly, and collectors began to expect continuity from year to year. Instead of random inserts, cards increasingly came in recognizable series. This shift mattered because it created a framework for collecting, not just finding a card, but completing a set. For many kids, collecting became a daily routine. Opening a pack of cards was a small moment of anticipation. Who would you get? Would it be a favorite player or someone unknown? That unpredictability gave the hobby its emotional pull. Cards were traded in schoolyards, sorted on bedroom floors, and stored in shoe boxes or binders. A simple exchange, "I'll trade you this pitcher for your outfielder," could feel like a major decision. In that world, value wasn't measured in dollars, it was measured in desire, memory, and personal meaning. This culture also thrived on community. Collecting wasn't usually a solitary activity. Kids compared collections, debated player rankings, and negotiated trades with a seriousness that often exceeded the actual monetary worth of the cards. A well-known player card could become a social currency among friends, not because it was expensive, but because it was respected. The hobby built its own internal economy based on reputation, preference, and excitement. Brands like Bowman played a key role in shaping this early collecting identity before later competition consolidated the market. Over time, design changes, team expansions, and seasonal releases gave collectors new reasons to stay engaged. Each year felt like a fresh chapter in an ongoing story of the sport, with cards acting as physical markers of that progression. As collecting culture grew, it also became tied to memory. Many people's strongest connection to baseball cards isn't about money or rarity, it's about childhood. The smell of a fresh pack, the excitement of a star play reveal, or the disappointment of a duplicate card all became part of a shared experience across generations. These memories helped anchor the hobby emotionally, turning it into something passed down informally from older kids to younger ones, and eventually from parents to children. What made this culture powerful was that it blended sport, play, and personal identity. A collection wasn't just a set of objects, it was a reflection of what someone cared about at a specific moment in their life. And because baseball itself carried such strong cultural weight in America, the cards naturally inherited that significance. In the end, the rise of collecting culture wasn't just about baseball cards becoming popular. It was about people discovering that small, ordinary objects could hold meaning far beyond their material form. What started as simple pieces of cardboard became part of how a generation experienced the game, built connections with each other, and remembered their own childhoods through the lens of sport. The boon that changed everything. For decades, baseball cards grew steadily as a cultural hobby, traded in schoolyards, stored in shoe boxes, and collected for fun rather than profit. But in the late 1980s and early 1990s, something shifted so dramatically that it permanently changed the trajectory of the entire hobby. What had been a relatively balanced ecosystem of scarcity, fandom, and nostalgia turned into a production frenzy that would later be remembered as the junk wax era. The turning point wasn't one single event. It was a combination of expanding demand, corporate competition, and a growing belief that baseball cards were no longer just collectibles, but investments. As Major League Baseball grew in popularity and visibility, card manufacturers saw an opportunity. The hobby was no longer just for children. Adults were now actively participating, and prices for certain older cards were beginning to rise. That early price movement sent a powerful signal. People were willing to pay for rarity. Companies like Topps, long dominant in the space, suddenly faced competition from new and returning entrants. Among them was Bowman, which re-entered the market during this period. Instead of limiting production to match traditional demand, companies began scaling up aggressively. The logic was simple but ultimately destructive. If demand is rising, print more cards to capture more profit. At first, this seemed harmless, even exciting. More cards meant more options, more players, more designs, and more ways to collect. Sets expanded rapidly. Special editions, foil variations, rookie subsets, and commemorative prints flooded the market. What had once been a relatively straightforward yearly release turned into a constant stream of new products. But beneath the surface, something critical was breaking: scarcity. When production increases faster than demand, rarity disappears, and without rarity, collectible value becomes unstable. Cards that were once considered special were now being printed in quantities that made them nearly impossible to distinguish from common stock. Entire binders could be filled with valuable cards that, in reality, had millions of copies in circulation. This was also the era when collecting began shifting into investing. Many buyers were no longer opening packs for fun, they were storing unopened boxes, hoping future collectors would pay a premium. This speculation created a feedback loop. The more people believed cards would become valuable, the more they bought and stored them. The more demand grew, the more companies printed. But unlike true scarcity-driven markets, this cycle had no natural limit. Production kept increasing, and the market became saturated far beyond sustainable levels. By the early 1990s, shelves were overflowing with unopened wax packs and sealed boxes. Cards were everywhere, yet none of them felt rare. Even rookie cards and limited editions lost meaning because the word limited no longer matched reality. The hobby had become overproduced to the point where future value was essentially built on an illusion of scarcity that didn't exist. The emotional experience of collecting also began to change. Instead of excitement over pulling something unique, many collectors experienced repetition and predictability. Packs contained the same players, the same designs, and the same sense that nothing inside was truly special. The joy of discovery started to fade under the weight of abundance. In hindsight, this boom wasn't just a period of growth, it was a structural break. It transformed baseball cards from a scarcity-based hobby into a mass-produced consumer product. And while it created short-term profits and massive distribution, it also destroyed the conditions that had once made the cards feel valuable in the first place. What remained after the boom was not just an oversupplied market, but a lasting lesson. When everything is made to be collectible, nothing truly is. When collecting became investing, for much of their history, baseball cards lived in a simple emotional space. People collected them to complete sets, trade with friends, or hold onto pieces of the game they loved. Value existed, but it was informal, based on excitement, nostalgia, or personal attachment. Then, gradually, that mindset began to change. Cards stopped being just things to collect and started becoming things to invest in. The shift didn't happen overnight. It emerged as certain cards from earlier eras began selling for unexpectedly high prices. Rare vintage cards, especially those tied to legendary players in Major League Baseball, started appearing in auctions with values that surprised even longtime collectors. As stories spread about people selling old cards for thousands or even more, attention naturally followed. What had once been childhood memorabilia suddenly looked like a financial opportunity. Companies like Topps were now operating in a market where adults, not just children, were major consumers. This changed the tone of the entire industry. Packaging, marketing, and product design increasingly emphasized rarity, exclusivity, and special inserts. Cards were no longer just part of a set. They were part of a tiered system of scarcity. Limited edition, serial numbered, and rookie chase became standard language. As this language evolved, so did behavior. Collectors began thinking less about completing sets and more about identifying future value. Instead of asking, "Do I like this player?" many started asking, "Will this card be worth something later?" That subtle change transformed the entire hobby. Opening packs became less about surprise and more about strategy. Buying decisions shifted from emotional to speculative. The rise of investment thinking also introduced a new kind of storage behavior. Rather than opening packs, some people began keeping them sealed, treating unopened boxes as appreciating assets. The logic was straightforward. If cards inside might increase in value, then the container itself could be worth even more if left untouched. This created a paradox, where the act of collecting stopped being about engaging with the cards at all. The product became something to preserve rather than experience. At the same time, grading services and authentication standards became more prominent, reinforcing the financial framing of the hobby. Condition centering, edges, surface quality became critical to determining value. A card was no longer just a card. It was a graded asset with a numerical score that could dramatically affect its price. This introduced a language closer to finance than fandom. But perhaps the most important change was psychological. Investment thinking reshaped expectations. Instead of accepting that most cards would have little or no monetary value, many collectors began to assume the opposite, that most cards should eventually increase in value. This expectation was not aligned with reality. In markets without true scarcity, widespread expectation of profit tends to collapse under its own weight. As more people bought cards, hoping for financial returns, production increased to meet demand. That increase, in turn, diluted scarcity even further. The very belief that cards were good investments helped create the conditions that made them poor ones. What looked like a booming market was, in reality, a system feeding on its own optimism. Over time, the gap between expectation and outcome became impossible to ignore. Most modern cards did not appreciate in value. Many became nearly worthless in resale markets, yet the investment mindset lingered, sustained by a smaller number of high-profile sales that masked the broader reality. In the end, the shift from collecting to investing changed. Not just how baseball cards were bought, but how they were understood. What had once been a hobby built on joy, memory, and connection became entangled with speculation and risk. And when the financial expectations failed to match the reality of mass production, the illusion of universal value began to fade, leaving behind a market that had learned, too late, that not everything meant to be collected is meant to be an investment. Nostalgia didn't keep up. For a long time, baseball cards seemed protected by something stronger than market trends, nostalgia. Even as production increased and speculation cooled, there was a widespread belief that emotional connection would preserve their value. After all, how could something tied to childhood memories and America's pastime ever truly lose its meaning? But nostalgia has a limitation: it is not evenly distributed across generations. Baseball cards were deeply tied to a specific cultural moment when Major League Baseball held an even more central place in everyday American life. For those who grew up in that era, the cards weren't just collectibles. They were part of daily routines: trading at school, opening packs after practice, organizing binders on the floor of a bedroom. The emotional weight came from lived experience, not just the objects themselves. However, nostalgia does not automatically transfer. It has to be shared, reinforced, and re-experienced. As time passed, newer generations grew up in a very different media environment. Instead of a single dominant sport and a limited number of star athletes, there were now countless entertainment options. Global sports leagues, video games, streaming platforms, and social media personalities competing for attention. The emotional center of sports culture became more fragmented. Even though companies like Topps continued to release new cards each year, the emotional continuity that once sustained the hobby weakened. A card of a star player from decades earlier might still be recognizable, but recognition alone is not the same as attachment. Without personal memory tied to the player or era, the card becomes history rather than nostalgia. And history, while interesting, does not always drive demand. This gap between recognition and emotional connection is where much of the value erosion occurred. A card might be objectively rare or tied to a significant player, but if fewer people feel a personal bond with that player, people are willing to pay a premium for it. Collectibles depend not just on scarcity, but on desire, and desire is shaped by memory. Another challenge was the speed of cultural turnover. Sports heroes today rise and fall faster in public attention than in previous generations. A player who is dominant for a few seasons may still not achieve the long-term cultural permanence of earlier icons. Without long-lasting shared memory, the emotional foundation that supports collectible value becomes thinner. At the same time, the sheer volume of modern cards made emotional distinction harder. When every player has multiple card versions, inserts, parallels, and special editions, the sense that any single card represents something unique begins to fade. Even nostalgia struggles in an environment where everything is framed as special. There is also a generational disconnect. Many of the most valuable vintage cards today are tied to players and moments that younger collectors did not experience firsthand. While they may understand the historical significance, they do not carry the same emotional imprint. This creates a situation where interest exists, but intensity does not always follow. In contrast, nostalgia is strongest when it is personal, not inherited. A card only becomes emotionally powerful when it connects to a memory watching a game, hearing a commentator's voice, or idolizing a player during childhood. Without that personal layer, even iconic cards can feel distant. Over time, this imbalance became clear. The market for baseball cards did not disappear, but it narrowed. The highest values concentrated around cards that still carried strong cultural memory or historical significance. Everything else entered a more utilitarian space, trading at low prices, appreciated mostly by niche collectors rather than the broader public. In the end, nostalgia did not vanish. It simply did not scale. It remained powerful for those who had lived through the era of peak collecting, but it did not expand enough to sustain the inflated expectations of a market built during the boom. And as that emotional gap widened, the value of most modern baseball cards adjusted accordingly, not because the cards changed, but because the memories behind them did. What the market learned too late. It took years and an entire boom and bust cycle for the baseball card world to understand a simple truth. Value in collectibles is not created by production, hype, or even popularity alone. It is created by a fragile balance of scarcity, culture, and emotional meaning. When that balance breaks, the illusion of value can last for a while, but it eventually corrects itself. During the height of the modern card boom, driven in part by companies like Topps and others expanding product lines, the assumption was that demand would always justify supply. If people wanted more cards, producing more seemed harmless, even logical. But what the industry underestimated was how quickly abundance can destroy rarity. Once a collectible becomes too easy to obtain, it stops functioning as a scarce object and starts functioning like a commodity. The market also learned too late that speculation cannot replace organic demand. When collectors began treating cards tied to Major League Baseball as investments, prices initially rose, reinforcing the belief that cards were appreciating assets. But that rise was not rooted in enduring scarcity or widespread emotional demand. It was driven by expectations of future buyers doing the same thing. In other words, value was being supported by belief, not fundamentals. This created a feedback loop. Rising prices encouraged more production. More production diluted rarity. Diluted rarity weakened long-term prices. Yet during the boom, this cycle was difficult to see, because short-term excitement masked long-term consequences. As long as someone was willing to pay more today than yesterday, the system appeared healthy even when it was becoming increasingly unstable. Another lesson came from condition and grading systems. As professional grading became more widespread, the industry tried to introduce precision into value assessment. A card was no longer just good or rare. It was a numerical grade reflecting centering, edges, surface, and corners. This brought structure to the market, but it also reinforced a financial mindset. Collecting increasingly resembled asset management, yet even perfect grading could not solve the core issue. If millions of identical cards exist, even a perfect version struggles to maintain scarcity-driven value. Perhaps the most important lesson, though, was psychological. The market assumed that nostalgia would provide a safety net, that even if cards were overproduced or overbought, emotional attachment would sustain demand. But nostalgia proved uneven and limited. It remained strong for earlier generations but did not expand enough to absorb the massive supply created during the boom years. Without shared memory across generations, Emotional demand could not scale to match production. In hindsight, the core mistake was treating collectibles like financial instruments without respecting what actually makes them valuable. Stocks derive value from company performance, real estate from utility and location, but collectibles derive value from belief, scarcity, and cultural relevance. When any one of those weakens, especially scarcity, the entire structure becomes unstable. The result is a market that eventually corrected itself. Prices for most overproduced cards fell sharply, while truly rare vintage pieces retained or even increased their value. The difference wasn't luck, it was structure. Items that were genuinely scarce and culturally significant held up. Items that were mass-produced did not. Today, the lesson is clearer than it was during the boom. Collectibles cannot be manufactured into long-term investments simply by increasing demand or labeling them as rare. Real value emerges slowly, often unintentionally, and it depends on limits that cannot be easily replicated. Once broken, the market learned, but only after it had already overlearned the wrong lesson, that if people want something badly enough, it will always become valuable. Baseball cards showed the opposite. Wanting something is not enough if it can be endlessly reproduced. The story of baseball cards is really a story about how value is created, and how quickly it can disappear when the conditions behind it change. What began as small, uncertain pieces of cardboard gained meaning through scarcity and chance. As Major League Baseball grew into a cultural force, those cards became more than memorabilia. They became shared symbols of fandom, memory, and identity. For a time, that emotional connection was strong enough to sustain an entire collecting culture. But the balance eventually shifted. Mass production from companies like Topps expanded the hobby far beyond its original limits. What once felt rare became abundant. What once felt personal became standardized. And as speculation replaced simple collecting, expectations of value began to outpace reality. Even nostalgia, often assumed to be the most stable force in the hobby, proved uneven. It remained powerful for those who lived through earlier eras of collecting, but it did not scale fast enough to support a market built on overwhelming supply. Without shared emotional attachment, many cards lost the cultural weight that once gave them meaning. In the end, the baseball card market did not collapse because people stopped caring about the sport. It adjusted because the foundations of value had changed. Scarcity weakened, emotional continuity fragmented, and speculation outgrew reality. What remains is a clearer understanding of collectibles themselves. Their value is not fixed, and it is never guaranteed. It depends on a delicate mix of limits, memory, and meaning, three things that cannot be mass-produced. Baseball cards didn't lose their value all at once. The conditions that created that value simply stopped existing in the same way.